Alright, so we're gonna do a quick trade breakdown for this gold long that I took today. So um, we start from the daily. We can see that gold is in a heavily bullish trend right now. You can even see for the last few years, gold has been heavily bullish, right? So after we broke above all-time highs, we've just been every daily candle right now has been bullish, right? So in this case, you just want to trade in line with the higher time frame order flow. You don't want to fade the order flow and look for shorts. So yeah, for me, all I was interested in is longs, but in this situation, there's not really the most high probability way to look for longs here on the daily, because with every daily candle is just expanding higher. So if you're looking for like a daily or weekly type of expansion in this type of profile, you're more likely not gonna get it, right? Because you would want to wait for like a daily or 4 hour retracement, but in this case you don't really get it. You just get price manipulating below the daily open a little bit and then pushing higher. So you see, I could quickly go over this. You see when price is in this type of trend in order flow, where you're not really expecting price to come for like a daily internal low, like daily fair value gap, for example. Like here, we only manipulated below the daily open and then we pushed higher and expanded. Essentially, when price is so heavily bullish like this, you're is more likely that daily fair value gaps will get front run, right? So what you want to do instead is maybe focus on the 4 hour or the 1 hour and use those key levels and look for expansions from there. So like, for example, here you had this 4 hour fair value gap, expanded away from it, and then you had this 4 hour fair value gap here, which was what I was looking for today, and then you look for a continuation back into all-time highs from here. So essentially, this is more for like a scalping, or not a scalping, but yeah, I mean, you can consider it scalping, right? Because you're only catching from this move to this move, right? You don't want to aim for too much higher. So like, say if I go on entry from here, you want to aim for all-time highs, just in case price rejects from the all-time highs and then goes back for the internal lows or even these lows here. So personally, because you don't really have like a drawn liquidity, right? There's nothing on the left side. That's usually what I target. Usually if I catch an entry here, I'll maybe take some profits here, and then I'd have like a higher time frame target that would be looking to take profits there, mainly like an old high, a higher time frame key level, which I'm expecting prices to head to. That's my draw. But because we don't have that, prices just break all-time highs. You want to take off majority or even take off the full position at all-time highs, just in case. So yeah, for me, also you're unlikely to get, because we're in such a trend and high time frame trend and order flow, you're not really gonna get those premium to discount plays. So like from here to here, for example, in this example, price came back to the discount, but then for here, for example, you use this dealing range low to dealing range high, price is nowhere near the discount. It only comes into the 4 hour fair value gap and then goes for all-time highs again. So essentially, you just want to wait for price to come into high time from key level, or you can just wait for like an hourly stop run and then look for continuation, for example. So now we have these lows, price sweeps it, continues lower, comes into this fair value gap, sweep this low again, and then we start seeing price start to flip bullish, closing above this gap, this down close candle, and then price just expands higher, for example. Or here, hourly low, sweep the hourly low into the key level. This one's actually really clean. I was watching this on this day: accumulation, manipulation, distribution. So that's essentially how you want to play it, right? Even on this day, you could have longed this break on order block, even this fair value gap as well. You could have longed the next candle open, or you could have waited for the retest to the fair value gap, for example, and then target all-time highs and then that's what I would take my full position off, just in case price rejects off this high and then goes for the, because of how overextended the daily is, eventually it's going to be a daily retracement. So you don't want to hold for above all-time highs thinking, okay, price is going to keep going higher. But yeah, so for this trade, we had the 4-hour fair value gap. Essentially, I basically took a scalp play from the 4-hour fair value gap to the all-time highs, right? Which wasn't too much, like it's not too far away compared to if I'm taking a swing trade or a intraday position where I'm looking to hold for the daily or weekly expansion. So this one is more of a, I'm only looking to take an intra-session play where I'm holding for maybe like an hour or two, not really anything too much longer. So I just need to, in this case, you just need to be able to, when you're taking like scalp plays, intra-session plays, you just need to be able to anticipate the next few hourly candles, right? So when I took the trade here, I was anticipating the next few hourly candles to come for all-time highs after taking out these 15-minute internal lows into the 4-hour fair value gap. So yeah, essentially you're just waiting for a stop run of some liquidity on an intraday basis. For example, here we had the Asia lows, we swept the Asia lows, and we took out these other internal lows into the 4-hour fair value gap, and then we saw expansion away, and we had the London reversal profile as well. So internal low. Also, this is a range play, so you know, range low, range high, internal low, external high. Take out the external low, displaced away. So what do we expect next? Price to go for the external high. So it's basically the same sequence that I use for all of my trades, just in this case it was on a lower time frame basis instead of like a daily 4-hour or hourly basis. So yeah, usually I also prefer hourly stop runs, but this low was on the 15-minute time frame, but this 15-minute low formed the 4-hour fair value gap, so it was fine for me to look for longs here. But yeah, we had the Asia accumulation displaced below the daily open into the 4-hour fair value gap, so that was clear manipulation, and then all you want to see is displacement back above the daily open. So I might as well even mark the daily open as well, which was here. So you see all these concepts that I'm saying, you know, you just want to apply them and apply them to form a narrative in line with your daily bias. So daily bias is easy right now, you just look for longs, and then you want to form a narrative behind that, being why should price go higher from why should price go higher from and go towards the drawn liquidity from what you're anticipating. So bullish high time frame order flow, price retreats into a 4-hour fair value gap, the key level where we expect price to reverse from and continue bullish order flow. And then what do we have? We have displacement as well in line with, from the 4-hour fair value gap. So expect price to go higher into the external highs at that point. So yeah, we have the daily open at this point. We had this low, swept the low twice, which is the pattern that I usually like to see when I'm looking for reversals. You know, price to, you know, initially take out a higher time frame low into the key level, retrace higher, take out the low again, and then we get that breaker formation, and then you even long the breaker, but unless I have some high conviction, I don't really use the long the breaker. I usually wait for second leg confirmation where price forms like a proportion block, and then you can long here. And in certain cases you can place your stop at the proportion block low, or you want to place it at the actual higher time frame invalidation. It kind of depends on the situation, but more times than not I usually use the higher time frame invalidation. But yeah, we'll quickly go over this trade. So we have the 4-hour fair value gap in higher time frame bullish order flow. We have the all-time highs, which is the external high, internal low, displaced higher, and then on the 15-minute we formed this order block, and then we retraced back into the order block. But at the same time we have this bearish fair value gap, right? So In these cases, I usually like to wait for price to close above the fair value gap, or I usually like to wait for price to form a proportion block, because then at that point it signifies to me that price is not rejecting off the fair value gap. It's just retracing into a better bullish PD array, and if price is retracing into a bullish PD array and then forms another bullish PD array with displacement, then that signifies to me that price is likely to continue higher. And with the context that price is coming from this 4-hour fair value gap in bullish order flow, is less likely to me that price is gonna reject off of this 15-minute fair value gap with no context behind it. So trace into the 15-minute fair value gap. So here is too early to long this breaker, this order block, and you can consider this a breaker, but it's not really a swing high here. It's just an up close candle before the down move. So I like to just use the order block here in this case. So we have the order block, retrace back into the order block, and then we pushed higher, and we closed above this down close candle, forming a proportion block. We've inverted this fair value gap as well. So right now we're forming bearish PD arrays, bullish PD arrays, and with displacement, and we are, even though we haven't closed above it yet at this time, we're not showing any sign of price respect in this fair value gap here. So with all that context in mind, I didn't need to wait for price to close above this fair value gap for a change in state of delivery. For me, this second leg here was the confirmation, because now we formed this proportion block with a fair value gap, and you don't want to see price to lose the proportion block if we're bullish in this case. So in this case, because of how large the candles are and how much we displaced, you don't want to see price lose the fair value gap or the order block, proportion block. So in this case, I put my stops below the proportion block low, because if price comes all the way down here, it's going to invert this fair value gap. It's going to disrespect this order block and turn it into breaker, and then price is likely going to go for these lows as well, and then probably even continue even lower, and then we're getting that we'll probably get that deeper retracement on the daily time frame. So essentially long this fair value gap, and then once price got above the London highs, that was my break-even level, and then I just fully closed my position at the Asia highs, which is all-time highs as well. So just this is like a textbook AMD, or even typical AMD play accumulation manipulation, and then price gets above the fair value gap, and then just straight up you can, if you get a long somewhere inside here and you get like a decent risk to reward, then you can just TP at this high, like around here. I say you catch the longs from here, and then this is like a typical scalp play where you're looking for price to go from the Asia lows all the way back to the Asia highs, essentially. So that's all you need if you're trying to intraday scalp. All you just need is this model where you're just waiting for price to sweep the Asia lows into a higher time frame key level, and then wait for displacement. You could probably even use the 5-minute or lower time frame, but for me, my intraday time frame confirmation I like to use is the 15-minute. So I stuck to the 15-minute time frame in this case, right? On the 5-minute, you can even use the 5-minute as well here, right? So if I was on the charts earlier, once I saw price rejecting from this fair value gap, coming lower, and then sweeping this internal low and closing above this inversion fair value gap, this bearish fair value gap, turning it into an inversion, I probably would have taken a long, and then you can place your stops at this low as well, which is also the proportion block low. So you could also take that trade. I would have probably taken this if I was at the charts, but price, I got the same entry anyway, because this formed a fair value gap, which was the entry that I waited for. Price retraced into the fair value gap, and then formed this other proportion block, and then closed above this fair value gap, which if you wanted to even take a third position, you could even take a third position here, which stops still have to be at this low here, and then at that point you would have to hold it for much longer, and you if you're fine with a 1 hour trade at that point, then yeah, that would have been valid. But yeah, that's the trade behind it. Just a typical power 3 below the daily open into a key level and sweeping the Asia lows, London low of the day profile, breaker, propulsion block displaced higher, and then TP at the Asia highs. So yeah.